Last week, the markets ended pretty anxious. They were anxious about the Fed decision that is coming out this week, and they posted the worst week since September. So the Dow fell 2.7%, almost 2.8%. The S&P tumbled 3.4%, and the NASDAQ dropped right at 4%. So the markets are worried. They're worried about what the Fed is going to say. And when we say the market, in the short term, we're talking about traders. So if you're a financial issues partner, you're not a trader. That's not what we're encouraging you to do. We're encouraging you to be an investor, to find good companies that operate in excellence, that are not engaged in the culture war. They're just focusing all of their resources on being a good steward with what they've been trusted with. Now, in the financial world, that means to generate a profit, to be a good use of their cash, to be a good, to use debt responsibly, to make a good product or a service, and to treat their employees and their customers right. So to operate ethically. And so what do? Should we worry? The majority of economists are now saying that we're going to see a recession in 2023. What does that mean? Is the sky falling? Do we need to get all of our money out of the markets? Well, I would say no. Recessions are, the market tends to be a leading indicator, and the market will start to recover long before the economy does, because it's looking at what's coming. The Fed is looking in the rearview mirror to determine what rates are going to be now and going forward. And it takes some time to work through these things. The housing market, the housing numbers are really delayed. Once we see the numbers in housing start to come back, that's going to really indicate to us that we've kind of already seen the bottom, and the market is most likely going to anticipate that. So don't try to time the market. Don't try to get out and wait for it to go down and get back in. You could be sorely wrong, and then you would not only miss out, lock in some losses potentially, but you would miss out on the income that you would have gotten had you stayed in. So at this time, just focus on looking at your portfolio, making sure you've got quality. If you're in those retirement years or getting really close to them, look at your holdings. Make sure that at least most of them pay good dividends, solid dividends that have continued to grow over time.